Hey guys, I've been meaning to do this video on RSI for a while, so I figured that 20 past 5 in the morning is probably a fantastic time to start recording it. So I'm going to go through some tips and tricks, how I utilize RSI, what it is, how to spot divergences, what a valid divergence is, and then how you can utilize RSI when it doesn't come to things like divergences, simply for trend continuation, and looking for the hot spots in RSI. I think that RSI is something that personally, more people should be using just because it provides a really nice secondary confirmation to the price action. And I think a lot of people disregard RSI because it's considered as this sort of noob indicator or something to kind of not really pay attention to. It's been used as a meme in the past when we get to the oversold or overbought conditions. I think that puts a lot of people off. So this is how I utilize RSI. It's a very active part of the way that I trade. So I just want to take you through some of the things that I utilize with RSI. First of all, what is RSI? It is a momentum indicator. It gives us an idea of when the underlying momentum is different from what price is currently doing. So when I say that, I'm referring to typically divergences where we see a high that's created in price, for example, but a lower high is created on the indicator, showing us there's been a drop-off in momentum between those two peaks. The other way that we can utilize RSI is because it is an indicator of momentum, we can use it for breakout opportunities or joining in on the trend. So two examples of kind of what I've just covered off there, and because I'm just doing this in one take, you'll have to bear with me while I find divergences. So there's one across this high here. So we can see we get the higher high in price and we get the lower high on RSI, giving us our bearish divergence, which we then correct from. So this is an example of where the underlying momentum is different to what price is telling us. And in this instance here, this is always a really good example here of breakout. So we see RSI here consolidating really nicely, dropping back in, strong breakout, trend continuation. So a couple of examples of on the surface, how I utilize RSI. So I'll dive into some more details around, firstly, what makes a valid divergence and how to spot divergences. So the first thing to tell you is that divergences that are in the direction of the macro or the prevailing trend are stronger and have a far greater chance of play out than those that are counter trend. So when we're looking at things like this big move here, okay, macro, we were still in a downtrend, and this trend is in favor of that trend and therefore played out nicely. When we see BTC on its current rip, okay, number one is we see far fewer divergences, but these divergences are also far weaker. When we actually get a strong divergence in the favor of the trend like we had here, it provides us with a great opportunity to try and jump on board that trend. And you can see here the play out from this obviously is a huge play out up here. We're talking sort of $2,000 in that run up. So divergences that are in the favor of the prevailing trend are always going to give you far stronger playouts. Depending on your personal trading approach, the way that I deal with counter trend divergences are either you have to be far more aggressive in your take profit. So we will usually see a far smaller dip in price or gain in price based on the divergence that is counter trend. So you have to be more aggressive with your take profit points. You can't afford to hold on to those positions assuming that it is now a full trend reversal that you've caught. Okay, you have to be more aggressive in your take profits. The other way that you can do it is you can just opt not to trade them, right? Only trade divergences that are in favor of the trend. Far greater playout rate, far greater potential for profits because you are looking for an entry point into the trend. So you have a far greater opportunity to try and run that trade further than you may do if it's a counter trend. Okay, so divergences themselves, what do they look like? How do they work on RSI and chart? Firstly, I'm not going to go through what the divergences are. If you need a rundown of what the divergences are, have a look at divergence cheat sheet. If you type that into Google, the divergence cheat sheet, you will find very good illustrations that will just demonstrate very clearly what divergences are. So what we're looking for when we look at divergences, I'm going to take this example as my example. What we are looking for is, primarily we are looking for RSI to be in the extended regions of RSI. So that is above 70 or below 30, right? They represent the extended regions of RSI. So what I'm looking for is I'm looking for a divergence to take place in one of the extension areas. So in this example here, we can see that we have price making this high here up at 10,006. We have the little move down, and then we have a second peak that comes up higher to 10.8, and we have this lower high here printed on RSI. This divergence is super clean for me, and the reason it's super clean is it makes two clear peaks, one after another, okay, that we can take for the highs from, and RSI stays in this extended region up here, in this overbought region, and produces the clear lower high. It can be quite tempting with RSI to start drawing RSI across weird areas of the chart, okay, that extend across a long area of the chart. Like, let's just say, for example, I don't have any clear examples here. So let's just say you're drawing it from here to here, right? So you're going, okay, look, here's the low, and here's the other low. And we've got the low here, and we've got a higher low up here, right? And this is going to be a fucking terrible example, and I realize that as soon as I've drawn it because of what happens afterwards. But in this instance here, this is not a valid divergence, right? This is not a valid divergence. There is a rule that says that if a divergence extends over 14 candles, which is the length of the RSI, if it extends over 14 candles, it becomes invalidated. And although I don't truly stick to that rule, it's a very good guidance number for you in terms of looking for divergences. So things like this, these are not valid divergences. So what happened here, okay, is not as a result of a divergence. Neither should you have been in this trade as a result of this wonky ass divergence here, okay? Divergences are clean peaks that stay above the 50 level on RSI. So they are clean peaks that stay above 50, and they happen in a very short span of time. Okay, they are one peak into another. One peak into another. They happen very quickly. The 50 level, the midpoint on RSI, should be considered as a reset button for you, okay? So if RSI travels back over the 50 level after making a high or a low, it should be considered as a reset, a fresh start. So any divergences that you think it would create after crossing the 50 are not valid. And that's the way that I approach divergences. Anything that crosses mid provides a fresh run. So you should be looking at divergences forming post the cross versus compared to the last highs or lows that it made. I hope that makes sense as I rattle that off to myself. I mean, it makes sense to me. I hope it makes sense. I hope it comes across in this commentary. So that's what I need to see in divergences. Obviously, the same applies at the lows. Okay, I need to see two peaks down into the lows. Let me find a bullish divergence down here. And this area will do here. So the low into the low. Okay, the low into the higher low. I get my two peaks. I get the divergence. Okay, and this one here actually is a bit of a bitch because it comes down for a third leg down here. Okay, but we still continue to diverge on RSI before we eventually get a snap up from this. So I'm looking for those peaks down, right? And then the opposite direction being taken, the higher lows on the indicators down here. All right, that's it for divergences. So look for them occurring in the extremes of RSI, above 70, below 30. Look for two clear peaks that are in short distance to each other. And do not extend your divergences out. Keep that 14 candle rule kind of in the back of your mind. And once the 50 line is crossed, always consider it as a reset. It is a fresh run on the RSI. Okay, so that's it for divergences. That's all I want to cover off in terms of thought process and tips around it. Next thing I want to talk about is joining the trend. So the 50 region on the RSI is a particularly nice point to either retest, cool off from, or join an existing trend. Whenever the 50 RSI is approached, or whenever we're hanging around the 50 RSI, price is usually telling you one of two things. It's either telling you that price has cooled off from a strong rally or a strong sell-off, and the 50 point becomes its sort of natural resting place to come back to, or is telling you that price is ranging. Okay, so there are a couple of points around that, and I'll take this area on BTC as the thought process around this, just to show you some of this. So this area here, so we're not going to be too prescriptive when we're talking about the 50, right? We're just going to be talking about around this midpoint on RSI, basically not at the extremes. So what we can see on BTC is we have the sharp sell-off on BTC, pushes us all the way down into this oversold region, and then we start to see the recovery. Okay, we start to see the recovery up here. But once RSI, and this is the term I refer to as cools off, okay, it returns back to this sort of midpoint of RSI, we then see another leg down and the continuation, okay? And in these strong trends, in these strong sell-offs, the 50 region is often the cooling off point. If we take the last run up on BTC here and we look at this 8.2 region, okay, here, we can see again, RSI made its way all the way up to here, up to these overbought conditions, sold us off back down to the 50 here, okay, and then continuation back to the upside. So this 50 point is kind of like the resting point. It's kind of a great place to keep an eye on any asset that has been in a strong run or a strong sell-off, and that you're looking to catch an entry point onto that trend. So I don't want people to think about RSI as simply this divergence tool, because actually it provides a lot of value in regards to when a strong trend is potentially at a cooling off point and you are able to join it. If we take a look at the 12-hour, we can see a largely similar picture. You can see here that actually this region here responded particularly well on the 12-hour to the 50 level, okay, coming up as far as 52. But basically staying at this midpoint before selling off again. So we can use it as a really good indicator of when to join a trend in motion. And again, we can see here in this little region that we looked at the very start of the video, which was this momentum kick through. And we can see that again represented here on the 12-hour. Okay, we can see this momentum drop off, and then bam, we get that kick in momentum again, pushes us back across 50, and we start to make a move back up. Let's take a look at the weekly. And again, the weekly is a relatively interesting picture because of this whole region here. So we can see the way that BTC across this region prior to our big breakdown to the 4K region, we pretty much just hovered below this 50 level. Right? We just hovered below this the whole time. We never managed to make it back across. But when did we make it back across? Here. As soon as we broke out of this accumulation period down here, okay, it should indicate some of the underlying momentum and strength behind this trend. We did this break for the first time in nearly, what, a year, 2 years? We did this break. So this was a really strong indicator that we flipped over again. And we can see the same here, right, on this current run up. We get back below 50, get back above 50, and we can see we've still got some way to go left potentially on this rally. Take it down to the 4-hour. The 4-hour is probably my personal favorite for looking at cooling off periods, right? So that's the time frame that I prefer to look at when looking at cooling off periods. And typically, I don't want to mess around with with BTC or any other asset that is kind of chopping around the midpoint, because that's indecision for me. So I don't want to mess around with an asset that's chopping around here. But what's particularly attractive to me is if BTC makes it down towards this oversold region in a strong uptrend, like it did down here, okay, with this break of this, okay, as we made it back down close to that extreme, and then we get the move away. We did the same down here, okay, at 7Ks. We hit that oversold area, big push up in momentum, and then carried us through out of this range. So I'm particularly interested when we reach the extremes, but also then when we break through, we have these crossovers back in momentum. You can see that the 4-hour reacts less favorably to the 50. There's still some decent interaction with it here, but it doesn't react as favorably with this 50 level. But you can see even from me just putting that line on there, okay, where we get caught under, where we have big momentum boosts above, retest around that region here, continuation, fall under, don't make it back above, sell off again, break back above, rally starts, okay, break down here, break back above, rally continues. So this 50 level is super important for me to gauge the strength of the trend and when I can potentially join in. The region of BTC that we're currently in after seeing the sell-off, we've broken back below the 50, but we're heading back towards this extreme. So again, I'm focused on what happens when we make it to this extreme, what happens when we make it near this extreme, like here, and what happens when we see that shift in momentum again to take us back through the 50. So I don't want you to consider RSI as a noob indicator, as something that is unusable because divergences can't be trusted in a trend. RSI, like any other indicator that you use, requires you to understand what it is, how to effectively use it, and the conditions in which it works best in. So I don't want anybody to sort of disregard RSI as a tool that they can utilize, because actually it works in a huge number of ways for people. If you're somebody who likes to trade off divergences, obviously you need to understand the way that divergences play out, when they're particularly strong, when they're weak, how to tailor your position size accordingly. But also, if you are a trend trader, if you are somebody who just uses sort of PA with your S&R levels, it's something that can actually just act as a secondary tool. It's something that you can just use for added confirmation of what you think you're seeing and whether or not momentum supports that thought process. All right, I'm going to wrap up there before I start to ramble and kill more time on this video. If there are any questions on this, my DMs are always open, so feel free to shoot me a DM. Post a comment underneath. I will get back to you in terms of answering questions, and I hope this provided some value for you.